And Tyler, here's another statistic for you. Gold prices have fallen for 10 straight sessions. Now, I covered that market for years, and I can tell you that is the longest losing streak since 1996. Meanwhile, oil prices today settled below $50 a barrel after government data showed U.S. crude inventories rose last week. And while oil tends to grab all of the attention in the energy markets, there's another area that's getting a lot of investment dollars. Morgan Brennan tells us what it is.
Thanks to the onshore drilling boom, U.S. natural gas production has surged more than 40% since 2005. Yet there's only one way to transport the fossil fuel in large quantities: pipelines. And there aren't enough. As demand from end users like power plants continues to climb, energy and utility companies are plowing billions of dollars into new infrastructure projects to transport, store, and process nat gas. Data firm Bentech Energy estimates $54 billion has been invested in new gas pipeline capacity since 2009. Nearly double that, $104 billion, will be spent from 2016 through 2018. Experts say even with nat gas prices under $3 per British thermal unit, demand for infrastructure won't slow, even if production does.
In the Northeast as a whole, you have about 25 billion cubic feet per day of new project capacity proposed in that region. And I would say at least around 20 or so of that project capacity is fully backed by shippers. So those projects that have those backings are very likely to move forward.
The lion's share of projects target the Northeast, where the gas-rich Marcellus and Utica shale formations currently yield a quarter of all U.S. nat gas production. Research firm IHS CERA expects to see 17 pipeline projects in the Marcellus over the next 3 years. And the flow of gas in these pipelines has changed as well, as power plants in the South and Midwest use more gas for electric power generation, and as petrochemical facilities and terminals exporting liquefied natural gas along the Gulf Coast look for more as well. Among the companies building out new networks or expanding existing ones are Kinder Morgan, Sempra Energy, and Williams Companies. Analysts say the ever-growing need for infrastructure is also sparking a wave of M&A activity. In July alone, Marathon Petroleum subsidiary MPLX announced its nearly $15.5 billion acquisition of MarkWest Energy Partners. That's a deal focused on nat gas transportation and logistics in the Northeast. And Williams Companies said it received a takeover bid from Energy Transfer Equity, which owns 70,000 miles of pipeline itself. Energy Transfer has reportedly said it will pursue that deal, whether Williams cooperates or not. For Nightly Business Report, I'm Morgan Brennan.